Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. In today's video, we are going to deep dive into the latest price action on gold, silver, platinum, and palladium. Gold remains stuck in this key wedge pattern, but is now testing the high end of the wedge, which again opens the door to a potential breakout. However, until it breaks out and confirms, it is just a test of resistance. Again, the charts are king. We follow the charts. All right, let's dive into it. We'll go through gold, silver, platinum, and palladium. This is what I'm talking about here, folks. So what we see very clearly is you have this bigger wedge pattern, right? And we've seen it kind of test the low end of the wedge here and all along here. And each time it's able to bounce. Notice again, the wedge starts up here for the descending portion, the high end of the wedge or triangle pattern. And again, right through these key levels as well. Notice in today's price action, we are testing that key trend line at around 41.75. So that to me, folks, is a line in the sand. If we close above 41.75 and confirm, your upside takes us to 42.50 approximately, 42.45. If that gets broken, it's an easy shot to our all-time high around 4,400, and then we'll be watching, can double top be taken out? If it is, a quick 1-2 step into 2026 at 5,000. Now, let's be fair. We've seen the high end of the wedge get rejected multiple times. Is this going to be any different? And the reality of it is we don't know. What we do know is that the more times you hit a trend line, the weaker it becomes. Now, again, this is your third hit. In general, third hits are medium. They're medium in terms of the weakness of this trend line. Again, it's not like it's hit 8 times or 7 times where it would be very, very weak. On the bottom side, if it were to get rejected and come back like this, then we're talking about something more important where we have basically 1, 2, 3, 4, 5. This would be the 6th hit. This line is now very weak. Now, it doesn't mean we're going to come down here. We don't know if price action will decline off of this level. Maybe it breaks out, goes here, pulls back, then goes to all-time highs and continues up like that. But the point is that as a trader, pure and simple, a technician, that understands emotion has to be kept at bay, and ultimately the charts are in charge, we need to follow this wedge pattern like a hawk, okay? So again, going back to the chart, the wedge pattern here, we are testing the high end on gold today at 41.75. Can we close above that today, or are we going to get rejected? If we close above it and confirm, easy 1-2 step to about 42.50 and then potentially 4,400. If it gets rejected and comes down here, this line becomes a very probable test and breakdown. Why? Because we've hit so many times that this trend line, the lower end of the wedge, has weakened significantly. If it breaks, it's a 1-2 step to 38.85 to 38.90, this pivot low. And if that breaks, then we go back to my 35 to 3,600 target, which to me would be the epic buying opportunity. Again, in a weird way, even though I have a lot of gold on the long side for a longer investment, part of me wants to buy more, but I can't buy more up here. Like, I'll just ride out what I have because I don't pay up for things right now. If you get a significant correction where we come back to 35 to 3,600, yeah, I would buy some there for my long-term holdings at that point. So really, it'll be interesting to see how this plays out. All right, let's flip over to silver, guys. Silver basically has a wedge pattern as well. The high end of the wedge comes from this bigger parallel that goes back to the financial crisis lows and the COVID lows. When you connect those two with a trend line, right, and we draw a parallel up. So all I did was I connected those two major lows. Major low number 1 in 2008, major low number 2 in the COVID era, 2020 of March. Then I stretched this trend line up to this high of the bull market in 2011. And lo and behold, it gave us our high pivot here and high pivot here. And we're still trying to figure out, can price get through that? Now we're flipping back to the daily chart here. Now, as we move up, there's really no major resistance until we get back to this trend line at around 54.25 on silver. All right, now once we get there, we have to see, does it break out or not? And likewise, on the downside, we've now hit multiple times here. If we start to come back in, do we end up attacking this line and breaking to the downside? So which way is this going to go, right? Is it going to go like this, or is it going to go like this? And as a technician, listen, I see a lot of comments. Oh, it's going to break out. It's going to do this. Frankly, all we can do is watch. We watch the wedge pattern. Now, listen, we get little advantages by understanding that the more times a trend line, aka one of the wedge lines, gets hit, it weakens. But just because it weakens doesn't guarantee a breakdown. It just raises the probability of it. Same thing with the upside. If we go back to those highs, it would be the third hit in basically a couple months of that high of the parallel. But until it breaks and confirms, we really don't know for sure. And so we really have to watch this. Now, if we break to the upside, I think we easily shoot to $57 and then probably 60 to 62 on silver. And if it breaks to the downside, I still think 42 to 43 is possibly, and a worst case scenario would be a pierce of $40 per ounce. Okay. So again, what's kind of interesting here is that a good technician is noting that there's wedge patterns on gold and silver. And while you're hearing crazy targets on both ends of the spectrum from various influencers or whatever you want to call them, in reality, a good technician is just saying, okay, it's a wedge and it's a consolidation period. Which way is it going to break in the near term? Now, long term, I'm bullish on both gold, silver, platinum, and palladium, right? But near term, where I'm swing trading, that's really what I'm focusing on here. All right, so let's go on to the chart of platinum here. Platinum's a beautiful chart here, guys. So if we look at the weekly chart on platinum and we zoom out, what we see is price came surging up here and tagged these three pivot tops from 2012, late 2012, and 2013. And it pulled back on a dime right there, right here. Now, it is holding technical support. I'm going to flip back to the daily chart so we can see this even more beautifully. Look at this area here. High pivot of the consolidation. Broke out, and where does it go? It starts testing that baseline. Now, listen, in all fairness, this is a bull flag. Like, this is a classic bull flag consolidation pattern. You have your up move like this, and then you have your sideways consolidation off of it, and it's still staying. If you look at the beginning of this move to here, it's basically staying in the top 50%, which is one of my criteria for the consolidation of a flag pattern. So it is a bullish flag pattern. I think that's important to recognize. It doesn't mean it can't break in the near term and potentially come down a little bit lower, but this is a bullish chart, and I am bullish on platinum. I mean, even with the run in platinum, if you look at the run in gold, it is still lagging. If you look at the run in silver, it's still lagging, right? And so that's important to recognize. And remember, platinum is rarer than gold. People often look at it as price, right? So, oh, well, platinum's only $1,500-ish, give or take. Gold is near 4,000, right? Around 4,000, a little bit above 4,000. So therefore, gold must be rarer. The actuality of it is platinum and palladium is about 15 to 20 times rarer than gold. The reason why price is lower is because on an industrial side, the demand is lower. And in all fairness, for jewelry as well, right? People have prized gold for thousands and thousands and thousands of years. Platinum, not as much, probably because it's rarer and wasn't discovered as much, but ultimately it is actually rarer. And you want to know what's a rarer, even rarer metal than platinum and palladium? Rhodium. Rhodium, which trades at about, I think it's around $7,500 an ounce. I did pick up a tiny bit of it, but it's rare. It's really, really rare. One of the rarest precious metals out there. But same thing, for its rarity, it's not priced as high as gold. Well, it technically it is priced higher, right? It's $7,000, $7,500 an ounce. But based, if you were just doing it on rarity, it would be like $50,000, $60,000 an ounce. But because, again, its main use is in catalytic converters, maybe a little bit of jewelry, it doesn't have the same pull as gold does. Just interesting little side notes, guys. Check it out. It's kind of cool. All right, platinum to palladium. Palladium, same sort of chart as platinum. The only difference is palladium still could come down a little bit more. I have a very intriguing level down here. Look at the two trend lines converging. If we were to get down here, I would absolutely be a buyer. This pattern is a bullish pattern, mid to longer term. And so ultimately, again, watch for that breakout to the upside. It's just a matter of I buy if it gets down to 1275 to 1225. One good flush, and I am buying Palladium. Just like in all fairness, listen, I mean, platinum actually looks really good here. Maybe it doesn't even come lower. That chart is really, really good on platinum right now. I would love to see a flush down just because I would like to accumulate some, but it is a very good chart at this point. All right, guys. So that's my rundown of the metals. Remember, here at Verified Investing, doesn't matter what I want to happen, doesn't matter what my positions are. We follow the charts. Verified Investing is all about charts and data, no BS. Listen, there's enough BS in the world, right? You go to social media, you hear people telling you gold's by the end of the year going to be 5,000, 10,000 by next year, 100, just like Bitcoin, right? I mean, all of these crazy people calling this, and then the haters are going to say the opposite. And in reality, they're both just looking for clicks when a real investor is going to look at the data and the charts. And again, that's where it comes to me, and Verified Investing's job is to at least put a beacon of clarity and just pure probability on the table. Let you guys decide, right? I'm just giving you guys the probabilities, and you guys take that information and decide what you want to do with it. All right. Thank you so much, guys. I will talk to you soon. Have a great one. Take care.